mortgage rates just climbed to an almost 10-month high. And the reason has absolutely nothing to do with the housing market. It only has to do with these oil tankers out in that Strait of Hormuz in the east. I'm Amanda Galbraith. I'm the broker owner of Arkansas Property right here in Maumelle, Arkansas, serving the Central Arkansas area. If you're thinking about buying or selling right here in any of our local areas, Little Rock, North Little Rock, Sherwood, Cabot, Bryant, Benton, the next 8 minutes will explain exactly what's happening, why it's happening, and what it means for your decision this year, whether that's to buy or to sell, honestly. So let's just get into it. Here's where rates actually sit. So according to our good friend over at Freddie Mac, as of Thursday, the 30-year fixed rate is right around 6.49, right around 6.5. That's up from 6.43% the week before. So again, we're not talking about huge increases here, right? The 15-year fixed is averaging just under 6, right around 5.82. Also, that is up, no lie. But here's the part that a lot of those headlines skip. Both of those numbers are still lower than they were this time last year. So yes, technically mortgage rates are up, and that's what the news headlines are flashing. Mortgage rates are up, mortgage rates are up, but they're still lower than they were this time last year. So again, up week over week, down year over year. But there's a second number that is worth watching and talking about. It's the one actually that intrigued me and made me want to record this video today. Freddie Mac reports a weekly average. So Mortgage News Daily tracks things daily. And as of Wednesday afternoon, the daily 30-year average had jumped to 6.68. The 15 was at 6.22. So that daily number is a leading indicator. It's telling us where the weekly average is going to head to on the next round. So by Wednesday afternoon, the average lender had pushed their 30-year fixed rate to what is now going to be known as that 10-month high. So if you've been on the fence and you're like, I'm waiting for rates to go back down in the threes. Okay, but that fence now is a little bit more uncomfortable because we're not going to see threes again, y'all. It was wonderful, but it's not reality. And right here in these middle sixes is where we're going to live. Let's talk about why that is, because this is where it gets what a lot of people will say is counterintuitive. Nothing about the housing market caused this. It's not like all of a sudden we got a million new houses. So it's not inventory. It's not builder activity. 10 million builders didn't decide to go build this week. It's not buyer demand that's still present. It's the war. It's what's going on over there in the Middle East. This week's tensions between U.S. and Iran escalated, and that has impacts on our markets. Strikes resumed. President Trump said we revoked Iran's waiver to sell oil. So here's what happens. We have this domino effect, if you will, or a chain reaction. So 1, the oil supply gets threatened. 2, oil prices do what? They go up. 3, when energy costs rise, everything that moves from one place to another, food, freight, construction materials, everything just costs more, and that's called inflation. 4, the bond market panics because inflation erodes the value of a fixed return. And 5, bond yields rise. Okay. 6, mortgage rates follow behind those bond yields. So it is an impact on mortgage rates, but it's not direct. So we follow these bond yields, if you will. That's why people that are in the real estate market are constantly looking at what bonds are doing. So Brad Case, the chief residential economist over at homes.com, explained the mechanism better than I could. I'm no expert in this field by far. He said long-term borrowing rates, which includes mortgage rates, include what's called an inflation premium. That is the compensation for lenders taking on that risk that inflation climbs over the life of a 30-year loan. And that inflation premium has climbed itself over the past 2 weeks. So his words were, continued attacks in the Middle East keep reminding everyone that our hope for lower oil and gas prices is just that. It's a hope. It's not promise. Then he said this line that I really want you to take into account and to remember, okay? Mortgage rates are not likely to go down until tensions in the Strait of Hormuz actually start relaxing. So read that again. The single biggest variable right here in our Central Arkansas mortgage payment right now is a shipping lane that is roughly 7,000 miles away. So it is not our inventory. It is not the amount of buyers we have. It is this rate that's being driven or impacted by something in the Middle East. It's not a housing problem. It's a geopolitical problem. And it means the usual advice. Wait for the Fed, wait for spring. Just doesn't apply the way that it used to. We used to always see that nice little Fed come out in the spring and give us some indicators. It's not there. Whatever is here today is going to be more expensive tomorrow. So what happens when rates begin to climb like this? Sales typically slow down, which is interesting because we're going to have the biggest July on record here in our agency, and we're moving with things in August as well. And we now have the data. I guess it's going to show us that the National Association of Realtors reported Thursday that existing home sales fell 2.4% in June. I'm telling you, we saw right here in Maumelle, Arkansas, at Arkansas Property, a very different avenue. Here's why that number is a little bit bigger than it sounds. June's typically the peak, and that's true. Our peak hit later this year than it typically does. I can't explain that, but it's true. It's the high water mark of the entire year. Families move between the school years, right? Sellers list in the spring, they close in July. What happened is sellers listed later, and that's why we got all these July closings. June is supposed to be the strongest month on the calendar, and it wasn't. And it wasn't here either. July is 100% going to be our strongest month this calendar year. Lawrence Yun, one of my favorite guys to listen to, he is the National Association of Realtors chief economist. He pointed toward the volatility itself. He said that the back and forth in monthly sales activity was driven by mild fluctuation in mortgage rates. Again, very little movement there. Shows just how sensitive buyers are to affordability conditions. Notice the word mild. We're not talking about rates jumping 2 full points. We're talking about 0.1% going from 6.2 to 6.3, and buyers tend to react based on that. Both ways, by the way. Nancy Vanden Houten, the lead economist at Oxford Economics, gave the forecast home sales will likely move sideways for the rest of the year. So we're going to hold steady. They're not booming, right? They're not crashing. We're just holding steady right here where we are. So now that you've heard all of this and you've gotten all this information, what are you going to do with it? If you are buying in Central Arkansas, there's a guy that's a senior loan officer at a mortgage company, put it in one sentence that I've been repeating in my head all week ever since I heard it. And he called it a speed bump, not a wall. It's a really good indication. We've got a speed bump in what we're seeing. And again, we are going to have our biggest month ever in July of 2026. So again, this is really specific in terms of location. So that's a big national picture. What's happening here in our local market doesn't necessarily have the same effect. So here's the practical reality right here in our neighborhoods in Maumelle, Sherwood, Cabot, Bryant, Little Rock, North Little Rock. When rates do tend to tick up, competition somewhat thins out. The buyers who are just casually browsing may take a pause and step back. The ones who stay have less competition and maybe a little bit more negotiating room. Sellers who are more willing to talk about concessions. And let me tell you, sellers, you need to be thinking about concessions. If you can afford a payment at 6.49 and you are buying into a less crowded market than you would have at 6%. So sellers, get ready to offer maybe some buy downs. 3 moves right now. 1, go ahead and get fully underwritten if you're a buyer, not just pre-qualified. Go through the full underwriting process. When daily rates swing this much, a strong pre-approval with a local lender that we can pick up the phone and talk to is your leverage. 2, ask your lender about rate locks with a floating down option. Rates fall later, you capture it. If they rise, you're protected. 3, run the math on a 15 versus a 30 year if you can do it. For some buyers, especially move up buyers with equity, sometimes that spread is pretty meaningful and you can actually do it. If you're selling in Central Arkansas, sideways sales don't mean sideways strategy. They actually mean the opposite. It means very specific and intentional strategy. So if our market begins to cool, which it has not done yet, but it does seem like we're a little bit insulated and those things happen to us a little bit later. In those slower markets, the homes that sell are the ones that are priced right on day one. They're presented properly. That's it. There's really no third factor. They're priced right for what they are. Overpricing worked back in 21 and 22 because rates covered your mistakes. Nobody cared at 2.25. At 6.68%, buyers have a calculator open. Okay. There's just no room to move a lot. So 2 moves. 1, price to the last 30 days of comparable sales. Do not go to what your neighbor listed in April. I can't tell you how important that is, that you've got a price at the most recent sale. If something sold down your house 2 weeks ago, that's your comp. Two, get the property genuinely market ready before it goes live. Walk through like a buyer and pick it apart little by little, because your first 2 weeks generate the most showings you will ever get. Really, that I say the first 2 weeks, personally, I think it's the first 3 to 5 days. If you waste them, then you're chasing the market instead of that market chasing you. So let me go ahead and close with the thing that nobody says out loud, or at least doesn't like to. Every buyer waiting on the sidelines right now is waiting for the same thing, lower rates, and they're all planning to jump at the very same moment. Now, if those tensions over there in the strait ease, and eventually they will, that inflation premium comes out of some rates and rates drop. I don't think they drop a lot, but they drop a little. And every single one of those sideline buyers walks through the door at once. So if you're a buyer right now is when you have no competition. So that's not going to lower prices when all those folks come out of the woodwork. It's going to increase competition. It's going to could increase prices. That's multiple offers on the same property. That's the market we were in several years ago. You can't time the mortgage rate, okay? But you can choose whether you buy your house while the market is quieter or while it's super crowded. You've really got to, we used to say, date the rate, marry the house. I don't really like that phrase, but you may have to marry the payment, if you will, and not that moment. So if you're weighing a move anywhere right here in our Central Arkansas area, Maumelle, Little Rock, North Little Rock, Sherwood, Cabot, all the areas that we serve, I would love to help you run your actual numbers for what it means for you, right? Your actual down payment, what you're actually looking at a monthly payment that feels good to you. No sales pitch, just 15 minutes with your specific information. We'll call it a consult and a strategy session to strategize when it's best for you. An honest answer about whether now makes sense for you. So the link is in the description. Hit me up. Would love to help you out. Again, I'm Amanda Galbraith, the broker and owner of Arkansas Property. 16 years, well over 46 million in career sales right here in Central Arkansas. Lived here my whole life and ready to welcome you to the area. Subscribe so you get the next rate update the day that it drops. And I'll see you next time. Remember, love where you live.